Hey, good morning, everybody. This is your morning market update for Thursday, July 28th. So lots going on. The Federal Reserve yesterday, widely expected, or as expected, increased their benchmark federal funds interest rate by 75 basis points or 0.75%. Important to keep in mind, this is not the mortgage rate. This is the rate at which banks borrow money from each other in the Federal Reserve. So, in fact, mortgage rates actually appear to be getting a little bit better as a result of the increase in the federal funds rate. I think this is primarily due to the fact that, mortgage rates hate inflation. I've mentioned this before. And, the Federal Reserve increasing the Fed funds rate is actually meant to fight inflation. So mortgage rates see that, as kind of a measure to bring inflation numbers down. And as inflation numbers do start to come back down, we expect that mortgage rates will follow suit. So mortgage-backed securities yesterday on the day closed. They rallied in the afternoon after the Fed minutes came out and rallied. I think they were closed up 42 basis points, and today has started the day up about 30 basis points as well. Stock market rallied yesterday on the news in the minutes from the Federal Reserve. I think closed over 400 points in the Dow. This morning up, I think opened a little over 80 points in the Dow. So continuing that rally. We'll, hopefully that will continue. It'd be nice to see both stocks and mortgage-backed securities continue the rally on the day and for mortgage rates to get better. The GDP numbers for the second quarter came out today. Again, the economy shrank for the second consecutive quarter, which is usually indicative of a recession. And then you also have multiple instances recently of what we call a yield curve inversion, which is basically an inversion of the curve, the difference between short-term and long-term interest rates, which is another indicator of a recession. But then you've got strong retail sales numbers in a lot of instances, and then you've got strong employment numbers. So, it's kind of conflicting information when it comes to whether or not we're in a recession or not. Of course, I think, you've got government officials that are saying that we're not in a recession. We're just in an instance of slowing economic growth. All that's yet to be seen, but there are multiple indicators that do indicate that we are in fact in a recession or headed for a recession. I feel like if we are, hopefully it'll be a relatively mild recession. But corporate earnings continue to come out strong in a lot of instances, although they're missing revenue estimates in a lot of cases. So just a lot of information out there right now. But long story short, stocks rallied yesterday. Mortgage-backed securities rallied as well. Mortgage rates, I expect when the Freddie Mac published 30 and 15-year rates come out today, that they will probably show a slight improvement in interest rates from last week to this week, just based upon the movement in the market over the course of the last day. So we'll keep you updated. Hope everybody has a great day, and I will talk to you soon.